When people hear I'm a full-time trader, they picture me glued to the screen every single day, hammering out trade after trade. That's the stereotype, guys. More trades, more money, right? But here's the reality. I don't trade every single day. And in fact, some of my best months have come from trading a little less. And if you want to actually last in this game, guys, neither should you, right? In this episode, I'm going to break down why less trading usually equals more profits, how overtrading destroys account, the psychology behind forcing trades, and the exact times when I refuse to trade. Okay, even if the market kind of looks tempting. So stick around because at the end I'll show you how not trading is one of the biggest mistakes one of the biggest freedoms I guess trading full time gives you. Okay, so most people think full time trading is like a job, where you clock in at 9, clock out at 5, and the more hours you put in, the more money you make. That's job thinking. That's not what trading is. Okay, trading doesn't reward effort. The market doesn't pay you for sitting there 8, 9, 10 hours a day. It only pays you for your decisions, right? When you catch a high probability setups, and those don't happen every single day. If you force trade just because you feel like you should be active, you're not a trader, you're a gambler, realistically, guys. And I'm not saying you guys shouldn't put time in the market. I'm saying you guys shouldn't put trades in the market every single day. Okay, when you're practicing or when you're on the verge of becoming a full-time day trader, I do believe that back testing, forward testing, and all that is fine. But when it comes down to actually executing, it should be like 2, 3, 4% of your time. Let's back this up a little bit with some hard numbers that I found. Okay, so studies on tens of thousands of traders worldwide show the same thing. The more often you trade, the worse you do. More than 80% of day traders quit within 2 years. Okay, after 5 years, only 7% are still trading, and only about 1% of those are consistently profitable for the long term. Why? Overtrading. Okay, one massive study looked at 78,000 brokerage accounts. The investors who traded the most, the hyperactive ones, underperformed the market by over 6% every year. Meanwhile, the low frequency traders, they barely underperformed at all. So the math is clear, okay? The more you trade, the worse your results will get. Overtrading is not a badge of professionalism. It's the fastest way to bleed your account dry. The best example for this is my swing account. It's up 700% right now, and I haven't traded in a month. If I had taken trades on that account in the last month, because I have still been looking at the markets actively, I would have lost most of the trades and I probably would have burned through some of that capital, but I didn't. I learned this, me personally, the hard way. Okay, when I first went full time, I thought if this is my job now, I need to trade every single day, right? Otherwise, I'm not serious. I'm not gonna make money. I used to think, okay, I can go out buy this dinner or whatever because I had a winning trade today. If I had a losing trade, I wouldn't do much of the day, and if I didn't trade, I felt like I didn't work. Okay, so I kind of forced everything. I traded everything. I was in trades just to kind of feel productive, right? And what happened there? Burnout. Burnout my mental, burnout the capital. Okay, I'd have 2, 3 A+ trades in a week, and then give it all back on like 8 junk trades that I never should have touched. My account zigzagged, right? My confidence kind of dropped as well. I started doubting myself, but it wasn't that I didn't have edge. It was that I was diluting my edge by trading garbage setup just to stay busy. Okay. The turning point was realizing the market doesn't care how much you want action. It only pays you when the setup is there. Until then, patience is profit. Okay. So why does not trading actually make you more profitable? One, your mental capital. Okay. So every decision drains energy. If you're clicking buttons all day, your brain turns to mush. That's when you break rules, revenge trade, chase. Skipping bad days keeps your mind fresh for when the real opportunity comes, right? Second, it avoids overtrading. Again, this is one of the biggest account killer. It's not usually one huge loss that blows accounts. Sometimes it is, but it's dozen of small forced trades that add up. Sitting out when the market's unclear prevents death by 1,000 cuts. Okay, the fastest way to kill an account, and I know because I've done it, is when you're, let's say you have $1,000 account and you take shitty trades, and like every 3 to 4 trades you win one. So your account goes like 1,000, 1,100, 980, 700, whatever. You know, like I kind of created numbers, but you get what I mean. And then when you're at 700, it goes back to 808 and 50. But then, like the it's like a downtrend, right? Your account's a downtrend basically. Number three, preserving money. Okay, think of your account as ammo. Okay, if you waste bullets on every flicker of price action, you'll have nothing left. When the big setup comes, by waiting, you're conserving firepower for when the odds are kind of like stacked in your favor. Okay, I've done it, bro, with funded accounts like 3 4 years ago. I used to get so pissed off because I had a maximum loss limit for the day. And imagine you hit your maximum loss limit for the day, right? And I'm pretty sure it's gonna happen to some of you guys. And you hit your maximum loss limit on a shitty trade, and then like 15, 20, 30 minutes later, you see a perfect trade, but you can't take it. So what would I do in that sense? I would buy another account and I would take the trade. But that's not that's not good. Just wait for your setup, guys. It's like it's really easy when you think about it, but when you're in the market and you're starting out, it's not easy at all. And I know it because I've been through it, right? I've been through it for like 2 years, and I went profitable like after 3 years and something of trading. I'm going on 6 years now of trading, 3 years plus full time. If you guys don't know me, trading is kind of like being a sniper. Okay, so quality over quantity, not a machine gunner. The best traders in history, which are Jesse Livermore, Bill Lipschultz, they all say the same thing. Livermore said, how did he say? He said, money cannot consistently be made trading every day, or something like that. And Lipschultz, they kind of had the same ideology. Lipschultz was saying, like, if most traders just sat on their hands, like 50% or something at a time, they make more money. Which is true, guys. The lesson in this is that you don't need constant action. You need selective action, and when you do act, you need to hold yourself accountable. This is your trade. This is what you're doing. Is this a good idea? Will you wake up tomorrow regretting it? If you take a trade and you regret it in the trade, or you're feeling stressful while you're in the trade, I'm sorry, buddy, that was not a good trade at all. Like, when I'm in a trade, I'm usually super calm, and then if something happens to go against my bias or against my trade, I just step out of it. And I was wrong. It happens. You can be wrong. Just don't be an idiot. Those are very different. So here's where most traders kind of fail, right? It's their psychology. We're wired to crave action. We're dopamine addicted, especially in this day and age. So sitting still kind of feels uncomfortable sometimes. Boredom pushes you to click buttons. Greed kind of whispers in your ear, you're missing out, you're missing out, right? Fear pushes you into trade after a loss as well, right? FOMO and all that shit. And every one of those emotions will lead you to over trading. What's the irony in this? The more you trade, the worse your discipline gets. Studies consistently show trading increases stress, burnout, and emotional swings. Your decision making gets worse, not better. Okay? So that's why pros always say protect your mental capital as much as your financial capital. A fried brain is just as dangerous as a blown account. Because usually, once your brain is fried, or once you're not mentally, or once you don't have that mental clarity, you'll fry your account anyways. So let's make this into practical, or let's make this practical. Okay? When do I personally refuse to trade? Mondays, no news, but I'm gonna put an asterisk in there. That I think if you're new, you shouldn't trade. I still look at the market, and I'll be honest. Days before NFP, CPI, very very heavy news. A day before news with no news, like let's say on Wednesday we have CPI, and Tuesday we have no news. Usually, unless we have a search and destroy day, that for me that's a no trade day. Okay, low volume days, bank holidays, half days, where like the moves are random and shit. When I'm not mentally sharp, okay, bad sleep, stressed out, tilted from a loss, I skip that day. I don't need to trade that day. Okay, and you don't need to trade that day either because you're gonna blow your account. Okay, after a big win, all right, sounds backwards, but overconfidence is deadly. Okay, and that's when people give it all back. So once I take a win, I'm off. Even if it's not a big win, if I see a plus, I'm off. Okay, well if it's a break even, whatever there, but you guys get what I mean, right? What else? I also have specific times that I trade, right? 9 to 11 a.m. Other than that, I will not take a trade no matter what it is, unless it's on my swing account. But that will depend on the pair. So if it's like a GBP pair, I'll trade London. If it's a USD pair, I'll trade New York, right? I'll only enter the trade on the swing if I'm in the session that the pair is about. The GPY, I'll enter in Asia. I also don't trade after two losses. Usually, two losses equals one winner. So if I take two losses, I'm gone. Also, if I come to the day and the action is looking choppy, I now that I live trade in my free Discord every day, I'll still look. I'll help people. I'll answer questions. But back then, if I sat on this chair and I looked, and by back then I mean before I started trading live, if I looked at the chart and I said in my head I was thinking, what the fuck is this? I would get up, leave, come back at 10, look, what the fuck is this? Get up, go about my day. Literally go about my day. I did not care. I don't. You don't want to trade those days. You're gonna learn the hard way that these days are what destroys you, right? Those aren't excuses, by the way. They're rules that keep me consistent. And remember, sometimes the best trade is no trade at all. Again, I'll keep repeating that till the day I die. Not trading every day is not a weakness. It's discipline, guys. If you quit your 9 to 5 to trade, why would you recreate the same grind? Trading is about freedom, time freedom, mental freedom, lifestyle freedom, and freedom does not come from forcing trades every single day. It comes from waiting patiently and striking only when the setup is undeniable. When you look at the market and you say this is obvious, obviously this, like, if I don't take this, I'm gonna be pissed. That's when it's actually good. It's the 80-20 principle, right? 80% of your profits come from 20% of the trades. Your job is to find that 20% and kind of ignore the rest, right? And that's how you smooth out your equity curve. That's how you protect your sanity. And that's how you actually make this a long term career, not a short term gamble. Okay? We're not trying to be millionaires within 6 months. We're trying to live a good life. So here's the twist. The key is not to just trading every single day. It's showing up the same way consistently over time. And that's exactly what episode is about. Consistency over time, right? How showing up the same way every day builds your edge. So hit subscribe, comment on the video, follow me everywhere if you guys want. Join the free Discord. It's again free. Because if you skip on the next video, you'll miss the real foundation in becoming a profitable trader. And I will catch you guys later.